Good morning, everyone. Welcome to the live show. I hope everyone turns up soon and we can get started and we can have a look at what's happening on the markets today. Had a couple of questions that we can answer today. Maybe the guys will come on the live show and we'll have a look. Let's see how we go. Let's see how things pick up and see if we can get going. Today's trade of the day was the FTSE short. And yeah, there you go. I haven't taken it. I was off having breakfast. So yeah, all right. That's one of those things. How's it, Carl? Welcome. Good to see you again. It's good to have you on board. And we're all having a wee look at what's going on today and where we stand. So let's go through the trades. Let's go through what's been happening. And let's go through what we think is going to happen. I've got a bit of trader's block this week. In other words, I just can't seem to find great trades. Bit of a struggle there. Okay, so good morning, Marley. Time frame here is 4 hours. We're not doing 5-minute charts. As I've said to many a person, we do the 4-hour swing trading, and I'm not here to try and show you what trades I can do and how great I am. This is a communication between me and you as to what trading's about and the best ways to trade and any questions that we might have and that sort of thing. How's it, Daniel? Welcome, man. Yeah, no, that's what I'm feeling, Daniel. Market, I don't know if it's my brain or if it's the market, but I got traders blocked this week. I mean, I don't want, you see, this is when you start getting that feeling that you want to drop the time frames down and start looking for trades, and that's when you're going to get hurt. That's when the market is going to lull you into that false sense of security and take your money. So be very careful of that false sense of security, that feeling that you need to trade. Don't chase the market, let the market come to you. Relax a bit. It's a bit saturated from yeah, no, totally. I agree with you totally. You know, I actually traded out of most of my trades on Friday because I don't like the geopolitics at the moment and I don't like leaving trades over the weekend in general. So I didn't take any risks this weekend, apart from this DAX, which unfortunately, well, fortunately, I couldn't get out of it on this particular product. So that worked out in my favor though. And perhaps I should just move the stop loss up a little bit. There you go. Stop loss moved up. So if we get taken out of this trade, we get taken out 850 in profits. That's no problem. Right. So always wait for the market to come to you. Yeah, totally. That's the thing. But you know, when the market's like this, you tend to, what the psychology of it is, what I've seen a lot of people do is they start feeling that FOMO, fear of missing out. And they start looking for trades, they start searching for trades, they'll even drop down the time frames to look for more trades, to try and get better trades, and it normally ends up in tears at the end of the day. This US 500, wow, it's rocking. I wonder if they're looking for the 6,000. I wonder if they're trying to get the 6,000 before Christmas. That might be the plan, But I would only get into this trade if it gives me a proper trade, and it's just not giving me that trade. It's just not giving me that moment that I can get in and take a trade. So, yeah. Yeah, you know, dude, I called the oil. I told you it's going short. But like I said, I got trader's block. Why didn't I trade it? I didn't trade it. Weird, eh? Yeah, but that's what happens with your brain sometimes. The long on the DAX, yeah, that's a goodie. Unfortunately, I traded out of the DAX on the funded trader account because the funded trader account, I don't want to leave it over the weekends, definitely, because it will get, if something goes wrong, it'll just get shut down. So I traded out of it. What an unfortunate situation that was, but that doesn't really matter because it's not making me any money anyway. It's only a challenge, so I'm not really bothered about that. I'm more bothered about the real thing, and yeah, the DAX has made quite a bit of money, so that's good. Unfortunately, the Brent, I don't know why I didn't actually take the trade. I called it and I didn't take it. Once again, trader's block. Guys, what I did, I put this Dixie in here on this list just to show you guys that, you know, the Dixie is the dollar, right? And what you can do with this is, if you don't want to trade it, at least you can look at the inverse of it. If the dollar is moving like this, all of these trades that are working against the dollar, you see like the euro is going the opposite way, the Great British Pound will be going the opposite way, the Japanese yen will be going the same way because the US dollar is in front, the CDR will be going the same way because the US dollar is in front. So if you see the Dixie doing this, then you'll probably see these trades doing that. Okay, so just for interest's sake, it really does tend to, the dollar seems to be the overwhelming force in all of those trades when you're trading Forex. Just, I thought I'd point that out there for you guys, because somebody asked me about the Dixie on the Discord, and I was just pointing out that that's, you know, it works against the gold as well, just so by the way. So, you know, I traded out of the gold on Friday as well. So I was actually hoping that I would get another long trade in here a little bit further down at the 26.30, and it's gone back up again. It was at 40 this morning, and I thought, I'll wait till it gets to 30, and now it's bounced again. But that's all right. I was kind of hoping we'd get a little bit more room here, a little bit better entry. But obviously that's not going to happen today. So that's not happening either. The Aussie dollar, US dollar, I was short, and then I obviously cleaned that out on Friday afternoon as well, because I'm not even in that time zone, and I didn't manage to get back into it either. So yeah, that's also unfortunate, that one. We're not getting back in right now. We'll just wait and see what happens and how it goes. The SA40, the Aussie, is nice and long as well, but it's also, it's at highs, but I think this might be a good long trade here. I think down at this level, down here, we can get a nice long trade on the all share, on the South African all share, and back up to the 80. I think it'll go up to the 80 here if things continue on the way they are. Just looking to see if we can get a nice trade in this area here. That's why I've added this onto the list as well, onto the watch list, because that's looking like something. And like I say, I've got traders freeze this week, so brain freeze, I don't know, just not picking up the trades this week. Okay. Yeah, look, the thing that I saw, the Great British Pound US dollar. Now, Jed, what I noticed with the Great British Pound US dollar is, if you look at the Euro US dollar, this is definitely short, right? And over time, obviously with experience, you notice that the Great British Pound tends to follow the Euro quite closely. And in this case, it's kind of settled off and sort of relaxed and gone into its little consolidation here. And it's on the support, and one would expect it to bounce out of this support. But if I take this line away and I look at the scenario that we've got here, okay, if I was to take this support away completely, and it's not showing, what you'll see is this bearish move down, a strong red candles, you see, strong bearish move, then a consolidation in structure, strong red candle, big amount of selling. That's huge selling. And then a bit of consolidation, and then it's just sort of settled here and consolidated. And when I see this, I'm expecting the next move to be a break to the downside, and I think it might just break through the support to the downside and shoot down. So just be very careful of that, particularly, as I just said, with the Dixie doing this, going straight up. That does affect the Great British Pound as well. What's holding the Great British Pound in place, unlike the Euro, is the Great British Pound has got its own strength, and that's why it's holding on. But that said, it's we'll see what happens. Let's just see how it goes, and we'll take it from there. The US dollar ZAR, that is still long, going well. I was long on that as well, dumped it on Friday, but on Monday when I came back, it was just too high. So we'll see. This will probably, the risk to reward's not good on it at the moment, because it'll probably go to 1780, 1790, and then come back again, unless it breaks through, which will be great. Yeah, no, just watch for that, Jed, because I think that there might be I'm just getting a feeling that there might be a bit of a down leg, you know. But that said, you've got to be careful of this, because the euro is already so far down. Not to say that it can't go to 1-to-1 again, and but this is also so far up. You know, how far can it go? Yeah, look, it could go through all the way through this 105. So maybe 104.50 here on the resistance. So it's got all this distance to move, which means your Great British Pound could also give you that sort of run as well. So I got a feeling it might just break through support here. So just be careful of that one. Don't get lulled into that false sense of security that you get lulled into. Somebody was asking me about stop loss in the comments. I don't know if they're here yet. If they do turn up, just drop me a message so that I can give you the procedure for stop loss and how it works. Because I get so many people asking me the same question. How many pips must I put for a stop loss? How many contracts shall I put for a stop loss? And we all know it doesn't work that way. You can't just have a set amount of pips for a stop loss, or a set amount of distance for a stop loss. You can, but you have to work out your exact level that you want your stop loss at, and then work out your value. That it works the other way around. But I'll just wait for that person to pitch up, and if they want to do that. If they don't pitch up, I'll still go over it. But yeah, I just, somebody was actually asking about that recently, and I just wanted to do that for them and give them that information. You're asking about Aussie dollar, US dollar, Aussie dollar, US dollar. Yeah, you asked about points, but I think somebody else actually asked as well, or asked something more relevant. I'll go over it for you as well, Jed, so you can also get the picture. But there was someone that particularly asked that question. It wasn't you, someone else. I can't remember his name. Anyway, the Aussie dollar, US dollar. Let's quickly go over that. And the way I see this is a definite down leg to the support level. So I can see this coming down to between the 66.40, 66.50 and the 66 level. The reason I'm not short on it at the moment, I wanted to take a short up here at the 67.60 level. If it came back up, I would have taken that short, because then there's enough risk to reward. But at the moment, there's more risk than reward on this trade. So I don't really want to grab it at the moment, and that's why I've got traders blocked this week. Yeah, that's my thoughts. It's going to continue on short for now, and it's probably going to end up down here at the support level. So for the Aussie dollar, US dollar, I hope you're short on it. And Aussie dollar, New Zealand dollar is also short. Yeah, same. It's very similar to this. So you can go with that. You did ask about the Aussie dollar, US dollar. Yeah, Aussie dollar, US dollar. Yeah, and then Aussie dollar, New Zealand dollar. I believe the Aussie dollar, New Zealand dollar is also short. Okay, let's have a look at that as well. AUD. It's not on my watch list. Let's just use Oanda because you guys are in. Okay. You guys are in that area. Yeah, look, what I would look out for here, you said Aussie dollar, New Zealand dollar short. You see, I'm not trading this at the moment, but just watch out for this, okay? Just watch out for this structure here. It could very well bounce out of that, all right? Just out of interest. It looks like it might just bounce out of that area there. There's a very strong buying candle there, and another one, and then a short one, and then a little longer one on that. There's 3 strong candles. There's money lying here, guys. There's demand. Okay, so if it comes back to here, it'll probably bounce and go long. So if you short at the moment, your risk isn't that great, your risk to reward. But if you short from up here, then you've got a nice trade, and it'll probably get down to here and then go long. Yeah, Chris, that's exactly, yeah, there you go. I'm not calling it support. Well, you could call it support because there is support here. Totally, you're right. There is support here as well. I just spotted this demand of money as well. Look at that big candle there. So I think it will actually come, probably worst case, come down into here and then shoot long. This is a long trade. And also trend support. Yes, I see that. I see the trend support. Okay. You could call it a little bit lower down as well. Just be careful of drawing it up there. I think you're more likely along this area here with a trend. That's your main trend, okay? Careful drawing it up here. That's not going to give you a proper run. So that's probably your realistic trend, and that's got more confluence for this money. I think the money is probably going to come into here and then go long. All right, so Aussie dollar, New Zealand dollar long, and then you're looking at what 1.0998, somewhere around there, 1.1 for a long trade up. I wouldn't take it short right now. There's no reward in it. How's it, Henry? Welcome. Fair value gap. Where are you seeing the fair value gap here? Yes, yeah, you are. You are. I don't normally trade them. That's why I don't really look for them much. But it's a biggie. It's actually in it at the moment. Yeah, you're quite right. You're quite right. It's in here, in this fair value gap. So, yeah, you're right, Jed. There's actually a, thanks for pointing that out. I don't look for them usually, and it is there. There is a big fair value gap there. Just remember, fair value gaps are not as reliable as demand levels or support levels, but they do give you an idea that there's definitely some money in here. So yeah, so it could basically go long anywhere from here to here and up. Okay, so at any point here, this could be a long trade. Any point. Good morning, Oda. That's welcome. I see Mozambique. Is that your surname, or are you actually from Mozambique? That's actually quite interesting. That's good to have you here. Yeah, so I don't know if you guys want to take this Australian dollar, New Zealand dollar long as we stand. You can. I'm pretty sure if you wanted to, you can. Just remember, I'm not in that time zone, so a bit tricky for me. Very tricky for me. This all happens when I'm sleeping, so not the best trade for me. Okay, so I was looking for a trade, and if anyone can suggest a good trade for me besides that Aussie dollar, US dollar, or New Zealand dollar, that would be great. Ah, you are from Mozambique. Fantastic, man. Fantastic. That's good. Yeah, you'll know that I'm from South Africa, so yeah, around the corner, man. Good to hear. So welcome on board. We're trading 4 hours. Right, so I'm going to go over that stop loss because I don't know if the chap that asked it is here, but Jed also wants to know, and it's quite important that we cover that subject because, you know, the guys do tend to say to me, how many points must I put my stop loss? And people don't know where to put their stop loss. I have made many videos on how to place your stop loss, but you know, a lot of them are maybe a lot of guys haven't seen them or haven't watched them or haven't picked up on the whole concept. Let me just see if there's something that we can play around with here, just for interest's sake. I'll just have a look and see what we've got. Okay. Let's say we wanted to trade. Okay, let's use this as a basis for a trade. All right, I'm gonna go against all the grains, and I'm gonna take a trade on this South African rand just to show you guys how you can work out your stop loss. Right. So let's go and draw some levels in just to get us to the point. You know, we take our levels from the line charts. So I'm just going to draw some levels in here just so that we get an idea. I don't know if I want to take this trade or not. But let's have some fun. Okay. Just drawing that level in just to give us a picture or a level. And basically what stop loss is, guys, is an invalidation. So in other words, you've taken a trade and you're looking at an invalidation on the trade. You're looking at where will this trade no longer be valid for me? Okay, my target is before the demand zone. I'm already halfway to my target. Okay, so you're actually short on that. All right. Okay, Daniel, don't miss out. Okay, so if I was looking for a stop loss on this particular trade, let's say I'm going to take this trade long. Now, I would normally wait for a green candle to come out of here before I take this trade long. But I'll tell you what, let's take the trade and let's just see how you put your stop loss in, just for fun, okay? Now, what we got here is we've got an area here where we could say, let's put our stop loss before the last low. We could put it below that low there, which would be fine. Just underneath the area that we've drawn in here, which is now what we term as our support. We've decided that this is our support area. Now, if you really, really, really want to be safe, this is where the structure will break and you can put your stop loss in there. So that is at 75,421. So let's say you wanted to take a trade on this particular product, and it's a buy trade on market, okay, and you want to see how that's going to work out to you. So 75,428. So I'm just going to put 75,428 as the stop loss. And we only want to lose $1,000. We don't want to lose more than $1,000. So we're going to put 8 units of risk in there, okay? Now you know how big your trade is. $967 loss if it hits 75,428. Now you can put your take profit in, which we know is 80,000. Why? Because 80,000 is at the high here. 79,669. Let's put that in. So 79,700. I think that'll be fair. And that risk to reward is not very good. You see that? That's a very poor risk to reward. So your stop loss should actually be a lot higher. But you can do a one-to-one if you want. I'm just going to show you how to put your stop loss in. You know how big the trade's going to be now. You know what the situation is. Now what you can do is you can basically buy it at that. Now, it doesn't really matter that you've got a one-to-one trade here. That's life. You can take this and move your take profit up a little bit higher and say, okay, you know what? I believe we're going to get to 81,000, and then you've got a better risk to reward ratio, whatever the case. But what I would do is if this moved into profit now, is I would now take my stop loss and move it up here. Something similar to what we've done with the DAX. If you look at the DAX trade, you're sitting here with a situation where the stop loss is in a positive 850. So if it gets taken out, you're going to make that profit no matter what, but your target's up there. So now we're sitting with a trade on the SA40. There you go, the SA40, and it is long. So we're hoping that this will give us a long trade to the upside. And with my luck, it probably won't this week. But let's see. Okay, so I hope you saw that, Malak. It was you that asked me about stop loss. So there you go. So it's not about the points. It's not about how many contracts or how far away you want to put the stop loss. At the end of the day, what it's about is you decide on your account. You've got a $100,000 account. You're going to risk $1,000 on every single trade, maximum. And that's your risk level. What you do is you decide where your stop loss is going to be first, which is an invalidation point. For me, the invalidation on this trade is below that low there. It is invalid below that low there as well. If you feel when it gets there you don't want to trade it anymore, you can get out there as well at a smaller loss. But if it gets down to this level, then this trade is definitely invalid because it's broken structure. So that's your stop loss. Then you work out $1,000, that's 8 contracts, and that gives us the trade. And then from there, we work the trade as we want it to make that kind of profit at the end of the day. Put it in there and see how it goes. It's not the best trade on earth. It's not a proper 2-to-1, but I just thought I'd show you guys how to take this trade if you wanted to take this trade. I mean, I could show you again on the funded account. I like to use the long short position tool on the trading view. You can move around the stop loss and take profit, then turn it into an order if your T is connected to your broker. How about long on Great British Pound JPY? Okay, so I'm just going to show you on the funded trader markets. Do we actually have the SA on this thing? As you guys know, I took this funded trader thing for you guys so that you can see if it's possible to trade funded trader accounts with our system. And I don't know if it's got SA40. No, wonder what they would call it if they had it in there. Aussie. No, they don't seem to have the South African. Let's see all the indices. Let's see if I can find South Africa in here. And no, they actually don't have South Africa on this funded trader account. Can you believe it? I actually can't trade it here. Oh well, that's life. Yeah, well, that's life. Okay, great. Wonderful stuff. I'll never make money on the funded trader account because I just can't seem to win. I'll tell you what, it's unbelievable. Oh well, there's the homepage, guys. 50% off. There's the code, it looks like. If you guys want this funded trader account, there is a link in my description. So it looks like they're having a sale at the moment. Maybe because they don't have South Africa on here, man. Oh, how am I supposed to trade something if it's not there? Okay, no, it's fine. No problem. No problem. That's fine. Okay, so as I said, okay, Mike, so I can't show you on that account either. I did show the guys here how you do it. But like, for example, then on the Dow Jones, I mean, on the DAX, the Germany 30, we've got a trade running here, for example, where it's gone into profit and the stop loss has been moved up to cost, and then it was moved up here halfway, and now it's 850 in profit, the stop loss, so that if this price comes back, it'll take me out 850 bucks in profit. Although it's 1,100 up in profit at the moment, we're not taking that profit. We're hoping for it to reach target. And if it reaches target, then we'll move the stop loss up again, right up to target. We could actually have added to the trade here as well, but I'm not going to do that today. I'm not going to do that at the moment. So as I showed the guys on the SA40 here, if you take a trade, first you work out where your stop loss, where you want it to be, an invalidation period. Then you work out how much $1,000 in contracts will be for that stop loss. That's 8 contracts, and that's your purchase. Work out your risk to reward. The risk to reward on this trade, not so good. It's more like a 50-50, but that's okay. I just wanted to show you how you can take the trade and in the stop loss scenario. So that's how we manage stop. That's how we manage our risk. It's not stop loss. It's an invalidation. In other words, when the price reaches that point, the trade is no more. It's invalid. You wouldn't take that trade if you walked in and looked at it and said, I want to take this trade. No, I won't take that. That's the wrong way. I'd rather go short on that. And you sitting long, that means the trade's invalid. You don't want it anymore. You want it gone. Okay, so I hope that explains it for you. Particularly, I think it was Malak that asked me that question. So, Jed, for you as well, I hope it makes sense. Biggest trade you've won. Points number is fine instead of money terms. Ha ha. Okay, look, in money terms, I had a really big win once, and it was absolutely stunning. It was on a company, and I won't mention any names because um, that company eventually got taken out, and it was all a big scheme and whatnot, went bad. But I traded it like I trade with the indexes here. That was my biggest trade ever. I bought this thing at around $5 and it went to 90. Okay. And I made an absolute fortune. Okay. On the size of the trade, around about close to $150,000 profit. So that was a nice trade. That was the biggest one of my life. It was about 10 years ago, somewhere there. That was a nice trade. Man, never forgot it. It was a biggie. I'd love to say I'd won $1 million in the trade, but I never did. That would have been great. But just guys, I tell you what, if you win a trade like that, the big thing you've got to be careful of, is overconfidence. That trade, you won't believe it. I sold it at its all-time high. I don't know if the angels were looking out for me or what happened, but I sold it at its all-time high, took the profit. I mean, I was so happy. I was just like, okay, I'm taking this now because this is just the biggest trade ever. I'm taking this money. And I did. And I think it was the very next day, if not the next day, the day after, and this thing started crashing. And you know, it went from $90 to 1 cent. It crashed completely because of some investigations in the company and things went wrong and all kinds of stories. And eventually they closed. I tell you what, I couldn't believe my luck. Can you imagine taking the trade at its all-time high, taking the money out, and then watching it go to zero? That is even more satisfying than winning the trade, to be quite honest with you. So yes, Jed, yeah, you can win some big ones, but they happen once in a lifetime. They happen very seldom. And there's a couple that are my friends that I've seen that have taken one or two as well. And it's a celebratory moment when you can pick up a trade like that, when you pick up one of those big trades. On the indexes and Forex and things like that, I think my biggest win has been around about between 60 and 70,000. That was my biggest ever. I've never done better than that. And the VIX, the other day I picked up 40,000 on the VIX. That was a biggie. But yeah. Champagne, man. I think I drank a case of beers, Jen. I remember those days. I think I went and bought a car. Oh, no, that was good. Yeah, those were good times. No, that's how it goes, you know. But you know, you have your bad days as well. Yeah, you get those weeks, you get those months, and you sit and think, where's the income coming from? How am I going to make money? And where's it going? It's going flat, and you're not, and the markets are, you know, you've got traders block and nothing's happening, and you get those moments as well. So that's why I look at my portfolio over an annual period. I used to look at it over a month to month, and I can tell you that it's so stressful because you get good months and bad months, and you just never know where you're going to be. And then I realized over the years, you know what? You need to look at it over a bigger period. You need to look at it over a year. And then at the end of the year, you can determine where you stand. And 9 times out of 10, you do quite well at the end of the year. It all comes together and you get your bucks in because there's just good times and bad times. And yeah, surprisingly enough, Daniel, that was dollars. So I don't like to talk about things like that. I don't like to boast about things like that or even discuss things like that. You know, it is very personal. It's very, I don't like to, I'm not like these other guys who try to say I'm this and that and the other, or I've done this, I've done that. I don't like to bring other traders down. I don't like to say that this guy's doing that and that guy's doing that wrong or anything like that. As far as I'm concerned, everybody is doing the right thing. And it's all about just getting your psychology right and doing the right thing. At the end of the day, we're all just trying to make a living. We're all just trying to survive. And then the one thing I don't like is when the oaks are trying to like point out how clever they are and how stupid everybody else is, and it really irritates me. You know, one of the big irritations for me as well is, you know, guys that are in the trading market, and they point out all their qualifications, and I'm this and I'm that and I'm the other, and everybody else doesn't know what they're doing. Everybody else is stupid. And you know, and as I've said to you guys before, I've got a license to drive a car. It doesn't mean I can drive a car better than you. You know, what counts is, can you actually do it? Can you make a profit? And that's what counts at the end of the day. Daniel, that's that's a big one. Tell sauce. Yeah. Yeah, don't tell them. Yeah. The euro Aussie dollar. Chris, do you live in Australia or sorry? The euro Aussie dollar. Let's have a look quickly. Euro Aussie dollar. Euro Aussie dollar. I'll just take the first one that comes up. We'll have a look. Euro Aussie dollar. Okay. There we go. What have we got here? I did something in here. Okay. Why is this the euro US dollar? No, man. Get that right. Okay. Let's have a look at it. That's looks like it's in a bit of a bearish trend on the 4 hour. Let's go to the daily and let's just see what we've got here. Bit of a spike there. Let's have a look. Put it on a line chart. I'll talk to you about the volume chart in a moment, Carl. Let's just have a look at this euro Aussie dollar. Euro Aussie dollar. So on the day, it really does look like it's in a bit of a range. There's your resistance. And let's go and have a look at support here. I'll take the support down here because it is quite close to that. And then let's just go and have a look at where we're trading. See, it's on the day, it's in a very big range. Okay. Doesn't seem to be coming out of that range. Let's just, if I take it back a bit, and it was from a bull run. So it's gone up and sat in this range. So it could resolve to the upside, Not necessarily though, because it's quite a biggie, this. This has been in a range for quite a while. Sorry guys, taking me a few seconds because I don't normally trade this particular product because I don't live there. But if I look at this, let's just see if there's anything here. It's gone down. Just looking at that, bit of an area there, nothing much there. Fair value gap's taken out. So, okay, so if I look at this, it's taken out this fair value gap here already. That's already starting to turn and go up. So if I was to look at this trade just offhand, just quickly, just from what I see, it's bounced out of support. There's a fair value gap there that it's already taken out and it's starting to point up. I would say it's pointing upwards. I'd say it's going to go and try and get to its highs up here. Maybe this one here first, then the next high at 165.61, and then all the way up to 166, and then all the way up to the main resistance. Looks like it's a long trade more than a short trade at the moment. So if I was going to trade the euro Aussie dollar, I would look at a long trade here based on, it's actually coming out of this fair value gap right now. It's coming through that and trading out of it. So yeah, long trade. And it is in a range on the day, so it's going to bounce between the two. So I would look for it to get up there. You've got a lot of reward there and a very little risk here. So the long trade actually does look better at the moment. How's it, Elaine? Welcome. What's the time? 10 past 10. Okay, you made it. Good show. I started the shows a little bit earlier because it's just, you know, the markets are open and that sort of thing. Chris, you're in the UK. Okay. Okay, euro. Okay, you're trading the euro against the Aussie dollar. That makes sense. It makes sense. You know, I do trade these things, but just remember that the Aussie dollar when they have news events and things that happen, they kind of happen when you're sleeping in Australia, New Zealand, and that sort of thing. And so if you see a good trade, take it. I always do. And it's a 4 hour, so you can leave it and let it run. But I normally try and keep my trades in my time zones as far as possible so that I can keep an eye on them. Boom, boom. Stop loss where? Where would you put your stop loss on this trade? Ah, you actually, good point. Very good point, David. Where would you put your stop loss here? I would put my stop loss definitely below that low. But now you're in the support area. If you can afford to, try and put your stop loss down here just below this area at about 158.80 if you can. Otherwise, you can put it up here just below that low, 159.82. That would be a good stop loss area. Work out how many contracts will fit into your money, and then work out how many contracts you can take for the long. Okay. Yeah, thanks for liking. It helps the channel. I never actually would have believed that the channel would get to this point after thinking I'll make 1 or 2 videos for you guys, and then we'll, you know, have a little bit of a thing going, and I'll show you guys why trading doesn't make you $1 million in a day, and so on and so on and so on. And suddenly this channel is sitting at nearly 6,000 subscribers. I'm hoping we'll get to 6,000 by the end of the week. And we're heading for 10,000 before Christmas, which will be a big celebration for us, guys. That's amazing. That's actually amazing. I can't believe that we got to this point so well. So I'm really pleased with that. Makes me feel better, and it keeps me going, to be perfectly honest. Yeah, you can. Yeah, it's a good option. You can do that. There's no problem, Jen. The thick volume chart. Yeah, I almost forgot, Carl. All right, let's talk about volume, okay, and how volume works, right? So you're going to put a volume chart on. I personally don't use volume where I can, but let's see. Definitely not on gold, definitely not on currencies, only on an index. So let's go and put it on this index. And I don't use indicators in general. So they don't even have volume on here. Are you kidding me? Where's the volume? Seriously, guys. Oh no, let's see if I can find volume here. I never use these things. Are you talking about this volume? Let's just put it on there and see. Does it even come up? Am I even seeing volume on here? You see, I don't use these things, so okay. The point of volume, I'm just going to explain volume to you so you know what I'm talking about, is at the end of the day, if you've got a tiny amount of volume, if the volume's very low, if there's not a lot of volume, and you get a big move like this, then it's not a realistic move. It's just price moving around, or something happening in the markets. If you get a lot of volume, strong volume, it doesn't matter which way it's going. If you get strong volume with the move, then it's a good move, and you can take that move. That's as simple as you can get with volume. Don't overcomplicate volume. Don't go nuts with volume. In fact, I don't even use it, to be honest with you. I used to, but I don't bother anymore. I just look at the chart. But as you can see, I can't even get the damn thing open. But at the end of the day, all you're looking for with volume is to see if there's a strong amount of volume. If there's a strong amount of volume and the price is moving with the volume, then you've got a decent move. You've got a strong move. It's telling you that that's a good move. If you've got weak volume and a strong price move, then you don't want to be trading into that. You just wait for it to come back. It will come back to its old price, and then you can trade it because there's no support behind it. There's no volume behind it. Okay, right. No worries too much, Coral. Yeah, I know. Yeah, totally. Greetings from TX. Hey, how's it, man? How's it? Welcome. Yeah. So thanks, Daniel. Yeah, Daniel put it in a nutshell here in the comment. Volume basically confirms the action. And that's all you can really do with volume. Yeah, you can overcomplicate it and you can go nuts with volume. But it simply, put in a nutshell, confirms the action. And that will make it more clear for everyone. It just tells you that this is actually happening. There is volume. There is something happening here. There is a lot of sellers. There is a lot of buyers in the market that are trading this and they're interested in this and the price is moving. Then it's fine. But what you find is sometimes you find that the price moves and the volume doesn't. That is the biggest sign in the stock market to say, oh, wait a minute, something's not working here. It's not gelling between the two. And then you know that's not a good trade. But watch out, guys, because volume works on shares. I'll use volume on shares if I'm trading a share, equity. Volume can work on indexes. It's okay. But do not use volume on Forex. Total waste of time, guys. It's not going to tell you anything. On Forex, it's going to tell you absolutely nothing. All right, so don't worry about volume on Forex. Forex doesn't work with volume. And then also even your commodities. I don't bother with volume on commodities at all. My biggest thing for volume is an equity. If I'm looking to invest in an equity and I'm looking at the overall picture of an equity, so I'm looking at investing in, let's say, Tesla, and I look at the product as a whole and I say, yeah, this is getting a lot of attention. There's a lot of volume in the price. Every day it's moving. There's a lot of volume in the purchase. This is a liquid share, you know, that sort of thing. And that's what it goes. That's what I look for. You see, you ask me how much lot size to use in a trading index. And once again, I point out to you, for example, this, right? Take the trade, you work out the stop loss, and then you take the lot size from the size of your stop loss. Okay, we don't take a standard lot size. We don't say I'm taking one contract, taking two contracts, taking 10 contracts, I'm taking 5 contracts. You work out your stop loss, and then you work out your contracts. Now, for example, this SA40 is now 8 contracts. 8 contracts gives me $1,000 stop loss at 75,428. Gives me $1,500 profit at 81,000. That's it. That's how you work out your stop loss. This one, can't even remember how many contracts is in here. Looks like 2. Okay. So don't you see, like, there's 2 and there's 8. It's 2 totally different products, 2 totally different stop losses. Don't work it as I must take so many contracts on every trade. Doesn't work like that. Work out where your stop loss is going to be. Work out how much it's going to cost you per point, and then work out how much you can trade. That's the easiest way to do it. Because if you're going to just like take... Oh, now I'm sitting with volume here. Look at this, guys. If you can... Now I'm sitting with volume here. So just by the way, this move is on low volume. All right, okay. Okay, so why did it come up there and not here? Isn't that interesting? So we got volume here. Let's see, we got volume here, but we don't have volume on the SA40. Well, that's interesting, eh? Huh. Okay. So anyway, yeah, look at that. Okay. Now you see, here you'll notice something. Just for interest's sake, guys. Carl, look at this. You see this move. You see how strong this US move is. Massive move up, okay? I mean, we've moved up from 57 to 58.60 in a matter of no time. Look at the volume. Do you see what I'm seeing? This volume is going down. This volume is weak. This volume is not strong at all. So this market has moved up on low volume, on very low volume. So caution is advised in this case because there's not a lot of volume pushing that price up. That is what volume can be used for, by the way. Okay, so now I'm sitting with volume on the charts. I wonder if the DAX is doing, yeah, the DAX is doing the same thing. It's moved up here on very low volume. And that's a bad sign. That's not a good sign at all. So keep that in mind, guys. The volume is low. The volume is not very strong. The volume's dropping off. With the volume dropping off, and you know why that might be, is because of the psychology of man, the psychology of woman, the psychology of anyone trading. And that is, the price is so high that I don't want to get into this trade anymore. But there should be sellers. You'd think there'd be sellers, but there isn't. Everybody's waiting to see what happens. So the volume's dropping off. The price will probably drop off with it at the end of the day. So be very careful of that if you are trading with volume. See these spikes here? Those were good volume days. This, we've got no volume, but we've got big moves down. That's telling me there's not much going on there as well. So be careful of that. That could affect the trades that we have in place at the moment, to be quite honest with you. David, you asked me, what does it mean sell now? I don't know what you mean by that. What do you mean sell now? Just ask that question in a little bit more detail so I can understand that and let's see. What does it mean sell now? I don't know. Sell now means sell now. Just explain what you want to know, what you want to understand, so that I get better. If the volume goes down. Okay, so what I was explaining on the volume is if the volume's low and the price is moving high or low, if there's a big bar, if there's a lot of movement in the price and the volume's low, then there's no deal. There's no, it's not a good move. And if the volume is strong, there's a lot of volume and the volume is going up and the price is moving, that means it's a decent move. It's a valid move. And there is a lot of people getting into the market and buying it. What you have to understand as traders is we're not trading squiggly lines. Behind those squiggly lines are loads and loads of traders, human beings, that are putting orders into the market, buy and sell orders. And you're effectively trading with or against them. And that's the basis of the market. And that's the basis of volume at the end of the day. So that volume that you're looking at, that volume that you're talking about, is traders in the market that are actually trading, buying and selling stock. And if there's not enough of them buying and selling that price up, it means the price is moving on a very light volume, which means it's trading on a feather, which means it could fall over very quickly. Yeah, so it's Daniel put it nicely, trading on hot air. There's nothing holding it up. There's no strength to it. And that's what makes it a sort of more complicated scenario. There was something else I wanted to trade here. I've actually forgotten what it was now. SA40 is obviously going to go down a bit before it goes up, but we only took that trade just to see what happens. It's fine. You know, the market's a 50-50. Doesn't really matter whether I took that trade or not. It's either going to go up or it's going to go down. There's no in between. I would like to do something with this funded trader markets, but I can't even find instruments that are available for me to trade, man. What do they want me to do with this account if I can't trade anything? That's pretty annoying. You know, yes, that's exactly it, David. You know, you read into it. read into it that the volume's dropping. So, the guys are looking at it and thinking, they're thinking exactly the way you're thinking. Just think of it that way. You're looking at this and thinking, will I take a long trade here? No, this is looking a bit tricky at the moment. It's not really looking like a good trade. Perhaps I should just, wait. And should I go short? No, I can't go short because it could just go long from here. So everyone's thinking exactly the same way you're thinking, so the volume's dropping off. Because a lot of the volume comes from institutions, remember that, not from just you and me. So most of the volume actually comes from the institutions. Those guys are making decisions. So you might see if it corrects a little bit, there'll be a lot of volume if it takes off again. So yeah, just think of it like that, that the other traders in the market are thinking exactly like you're thinking. I mean, if you look at this US 500, you would only buy it if it comes into that level there. So you're waiting for it to get all the way back down there before you're going to actually take a trade. And everybody else is probably thinking along the same lines. So that's why the volume will drop off. That's why I don't even really bother trading with indicators and volume and things like that, because they don't intrigue me that much. It doesn't bother me that much. It's just, it's there. I mean, we all know, we're all thinking who's going to trade here, but everyone's probably going to get in and trade here. So that's the basis of the market. This trade I only took to show you guys what stop loss is all about. The 50-50 market, I've taken it in the red, which is a no-no. We should never do that. But we've done that anyway. It'll probably come down into here and bounce out anyway. I'm just going to leave it, and it'll probably make a profit at the end of the day, 9 times out of 10, because it is in structure. Look at the structure. It's actually in its structure, so I'm not too concerned about it. It is on its way up, and it is a bullish trade. We'll leave it. We'll leave it and see what happens. Gold, I wanted to get in again. No trade there. Brent still short. Who was short here on the gold? Somebody was short on the Brent, I mean. Somebody was short on this Brent. And you've done quite well. It's going to go all the way to the bottom here, it looks like. Looks like a goodie, man. US CAD might be tipping back from its long-term 4-hour uptrend. Just be careful on the US CAD. Look at the Dixie. Also tipping back, same sort of scenario. And you go to the US dollar CAD. This US dollar CAD is not, it's a pole, and poles fall over, and it's already looking like it wants to fall. Okay, if you planted a pole in the ground and it was at that angle and that long, it's probably going to fall over. But it's a probability. There's no sign here to say to you, take a short trade. You're gambling if you take a short trade at this point. There is a little candle here, but just remember, a candle is only valid for the next candle. It's not valid for the whole chart. So while you might get a little hammer here or something like that and say, oh, I can take the trade, it might only go short to there and carry on going long. What I would do with this is I would wait for it to get back into here and then maybe take a long trade out of there. That might be a good trade. But to touch it in this area, look, you're getting this advice from a guy who's got trader's block this week. But yeah, there you go. I'm not touching it right now. I do see a pole falling over there, that's for sure. JDR just asked me, as a trader for 30 years, what yearly growth did you aim for in your early days versus what you aim for now? Don't you think that's an interesting question? Because here's the thing. When you're a new trader and when you get into the market, do you think that my psychology was any different from any other beginner? Okay, just because we didn't have computers and we didn't we didn't have computers like this, and we didn't have this kind of stuff and this kind of technology to make it lacquer for us. My beliefs when I got into trading was that I'm going to get into trading and I'm going to make a living from this. And not only am I going to make a living, I'm going to become extremely rich overnight, just like everyone else believes. Because that's what they promoted. And they promoted that you can make so much money from a chart, right? And in those days, they used to show us the scenario of the trends now. Where is the trend? Like, for example, they would show us that you can't just put money in here. You're taking all that money off the table. It goes up and it comes down. You buy again. It goes up and it comes down. You buy again. And they promoted this to us. And in those days, I thought, sure, I'm going to make so much money. I'm going to make so much money trading. So yeah, my target 30 years ago wasn't even a figure. It was just, I'm going to be a millionaire. I'm just going to be so rich immediately from trading. And then a few years in, the reality sets in, and you realize that, well, wait a minute, it's not that easy. And you have to you have to learn how to do this. You have to figure this out. And I must admit, my first couple of years were very sort of haphazard and on and off. But at the end of the day, it sets in and you start to realize, and most people don't, by the way, most people don't get this information and most people do not understand this. It's a business. It's not a trading game. It's a business. And when your mind clicks over to that, because I did actually have another business that I had started at the time. And I realized that, you know, when I go to my business, I look at it and I want to make a profit. But when I go to my trading, I'm just like, it's almost like gambling, man. So I was like, no, this is not right. There's something wrong with this. I have to have another look at this whole picture. And it just clicked on my head that this is a business. You need to make a profit. It's profit and loss. That's it. End of story. And when that clicked over, then I realized, okay, we need to have a profit target. I must say my profit targets in my earlier years were a little bit far out. I tried to reach them and I realized that it wasn't easy to reach those kinds of targets. So over the years, I realized that you want to aim for more than you can make in a bank, but you want to also aim for enough to be able to make a sort of living out of and that sort of thing. So I would always aim for around the 25%, and I've always kind of kept that. And then some years you make 100%, some years you make 50%, and some years you make 10%, and some years you make minus 5%. Oh, those are bad years. But, you know, that's life, and that's how you work with it. But the reality of it is you're going to aim for about 25%, 20%. That's where you want to be. Like I say, in the early years, you get excited, and you think you can turn it into an absolute fortune. Yeah, I am rambling on, eh? But guys, also, you know, I actually thought about it and I was thinking about, you know, these guys that are doing these things and saying you can turn $100 into $1 million. And I know there's one guy who's on his 6th run, I think, and trying to do it. And he's a professional trader, and he's failed 6 times trying to do it. And he normally trades on a 60% win rate. And as I've told you guys, I don't believe in win rates. I think win rates are rubbish. They don't mean anything. Profitability means everything. But, you know, if you try that, you know, we could run an experiment here and try it just for fun, but it would just be a total waste of time. Because what actually happens is you take it and you have to take maximum risk on every single trade. So you make 100, then 1,000, then, you know, and so it snowballs. But there's always a point here before you reach the 10th trade that you lose everything. And that's where the thing all goes pear-shaped. It's a great idea, but it never works because, unfortunately, nobody can win 10 trades in a row, no matter how good they are. Yeah, okay, Jed, off to work with you. What's the time? Oh, yes, I'm probably also going to, I'll stick around for a little bit longer. And but I'm also probably going to have to move on in a little bit and get on with what other things I like to do and whatnot. But yeah, I'm okay. I can hang around for a while. I need to find a trade for this funded trader markets for us, man. What kind of trade can I find? I'm searching for trades now and I can't find anything. Now I'm waiting for the trades to come to me, but on this account, there's actually at the moment nothing coming to me. So yeah. And I can't trade the SA40 now, just for fun. Okay. You ride the trade as long as you can, you ride the trade as long as you can. So for example, we're riding the trade. So you see here now, I've moved the stop loss up into profit. So we're 850 in profit here on this trade, for example, right? You got a $2,000 target. Now, most traders were 1,072 up right now. So most traders would close this because that's a nice profit. But I'm not those traders. I wouldn't close this. What I would do, I'll just keep moving my stop loss up until it comes back and takes it out. That's as simple as it gets. At this point, you might want to add to the trade because it looks like a really good trade. But what I would say here is if it comes back a little bit and then starts to go long again, then you can add to the trade if you want to. But if you see a valid trade, then you add to the trade. At the moment, I'm sort of seeing it go up and I'm letting it go up and I'm quite relaxed with it going up, quite relaxed with the profit that we're sitting with. So I don't need to actually add to the trade. As far as I'm concerned, there's enough in the trade. And if it takes it all the way up to here, that'll be excellent. That'll be a good one. A little bit worried about that candle. A little bit worried about what we looked at just now on the volume side, low volume. There's a good chance it'll come back, but does it worry me? We're going to make a profit if it comes back. No big deal. No, I won't even close it at the target. What I will do is I'll take the stop loss and put it just here. When it hits the target, I'll just put the stop loss here. I'll move the target away. You know, when you guys put stop losses in and you move the stop loss away when it's getting to the stop loss so that you don't lose the money. You know, when you do that, you're not supposed to do that, eh? Don't do that. What I do is I take the profit level and I move that away. Move this profit level away from the price. And then I move the stop loss up behind the profit level. That's the way to do it. So for example, this SA40 that we took just now, that we're playing around with, if this came down to here, would I move the stop loss down? No. That's lost. That is what I'm paying for the trade. You've got to look at a trade and say, I'm paying that for this trade. That's gone. That money I paid for this. It's like I went out and bought a pair of shoes and they cost me $974.85. That's it. That's gone. That's paid for, right? But you get lucky and it goes in, well, not lucky, it's skill, eh? It goes into profit and it goes the way you expected it to. Then you take that money that you paid for the trade and you bring it to cost and you say, well, now that trade's costing me zero. It's costing me nothing now. So now I've got a free trade. Then I start pushing it up into profit. Now we're making profit. Now we're making money. And obviously, in all probability, if you take 10 trades, you lose 5, you win 5. You want to make as much as possible on your profits, lose as little as possible on your losses. So you want to get out of the losses as soon as you possibly can. As soon as you see that this is worthless, let me get out of there. Let me get my money out of there before it takes more. And that's basically how you do it. Okay. Do you prefer big trades in Forex so you profit more with small changes, or having multiple smaller trades? I'd rather have multiple smaller trades. This is something I learned very early in my career, is putting all your eggs in one basket will crush you. It will end in tears. It's very easy to put all your eggs in one basket because you believe in that basket. And you make that big win and you think, this is good, you know? But look at it from this perspective. The risk, you decide on the risk. You say, I'm going to use the round figure again. You've got a $100,000 account. And you say, I'm prepared to risk $1,000 on every single trade. That's it. If you take 10 trades, you're risking 10% of your account. And always the risk from the early years, from the start of trading, was always risk 10% of your account. So now on each individual trade, you're only risking 1%. So now you can take 10 trades, risking 10% of your account. The chance of you losing all 10 trades is, in all probability, it shouldn't happen. And at the end of the day, you're risk adverse. You've negated the risk by simply keeping your risk the same and keeping your risk at the same level. So you rather have a bunch of small trades than one big trade. Because remember, the one you can be as confident as you want in any one particular trade, and it will go the other way. For example, we took this SA40 earlier, having a bit of fun to check out the stop loss, right? So that I could show you how to take a stop loss. But was I confident in this trade? Certainly not. In fact, my opinion, I'm going to lose this trade. In my opinion, this is not a good trade at all. And if it starts coming down to these levels here, I'll probably get out of it. Not happy with this trade at all. I think that this trade's going to fail, right? So I probably would have taken a smaller trade had I wanted to, and I'm not even supposed to do that because you've got to keep your stop loss the same with every trade. But you know what? It's a 50-50 game. So why am I leaving it in if I'm not confident in the trade? Because it's a 50-50 game. Do you know what? This could turn the other way, go the other way. So as confident as you are, as sure as you are that this is good or bad, do you know what? The market will lull you into a false sense of security, and it'll do exactly what you didn't expect it to do. So taking one big trade is probably going to end in tears. And in my case, it has. So, you know, in the past, so I've learned my lessons. You pay your school fees, you learn your lessons, and you move on. Yeah, Jenny, I assume you won't short the euro US dollar and the Great British Pound US dollar at the same time. No, you see, those two products, I won't trade them. I'll prefer not to trade them at the same time. It's not to say I won't, but it's kind of a question of exactly what we were talking about now with risk. If I trade the euro US dollar and I trade the Great British Pound US dollar, I'm basically trading the same thing. So what happens to the euro US dollar is in all likelihood going to happen to the Great British Pound US dollar. And effectively, if I take risk on this and risk on that, I'm risking 20 or 2% of the account on the same trade. And if you took 10 of these, then effectively, like I said to you, the probability of all 10 trades losing suddenly becomes a reality because you're trading with the same thing. So no, I wouldn't trade both together if I can help it. I prefer not to. I prefer to keep them apart. Head of ECB rate cut. So hang in your hat on the news again. Bit of a rate cut. Something's going to happen in the markets. Things are going to change, and everybody's getting excited again. And that's most likely on low volume again. You know, that's the big problem with these news events. The news events come out, and everybody gets all frustrated, and they start doing silly things and moving the markets around. Yes, totally. The Great British Pound and Euro US dollar are highly correlated, and they're not the only ones. The Aussie dollar, New Zealand dollar correlated. You know, you've got to watch. Oh boy, I think we reconnection successful. Okay, that's a bit tricky. Something went wrong there. I do hope everything's okay. Right, there was a disconnection and a connection there. Something went wrong on the show. So I'll just see if there's a glitch. We'll see what happens there. What was I talking about? Yeah, but it happens in the indexes as well. As I was saying, for example, US 500, NASDAQ, which is the Tech 100, and the Dow Jones. Now, the NASDAQ and the Dow Jones kind of breaks up the market into the tech, which is the tech stocks, Dow Jones, more your financial stocks, banks, things like that. So you might get a slight difference between the Dow Jones and the NASDAQ. Not a big difference, but a slight difference. They'll move the same way, but you'll get slight differences between the two. And then you'll get the US 500, which incorporates basically both, moving around. So what is the point of trading the US 500 or S&P 500 or the mini ES, as some of you trade, and then the NASDAQ, the Tech 100, or the Dow Jones at the same time? Because kind of just trading the same way. So all three of those trades will fail at the same time, or they'll profit at the same time. So effectively, just choose the one that you think is the better trade on the day. It's not to say you mustn't trade each and every one of them at different times, but I wouldn't trade all three of them at the same time, because for me, that's just an invalid trade. It doesn't make sense. So I'll trade the one that looks the best trade. So if this one looks like the best trade, I'll take it. If the Tech 100 looks like the best trade on the day, I'll take that. Or if the Dow Jones looks like the best trade on the day, I'll take that. And it works the same way as the euro and the Great British Pound scenario. So if you look at the dollar's starting to fall over a little bit here. Don't know how that's going to affect things. Okay. Okay, so Orlando, welcome, man. Sorry, late to the party. Ostelos, we got to move stop loss in my favor without getting stopped out for a put and struggling with sizing and moving. And luckily today we're covering stop loss in force. And I'm sure the people that are on are tired of me talking about stop loss today. All right, so before I go, I'm going to go over it one more time, particularly for Orlando here. Euro US dollar is recovering and I'm planning to add to my shorts. So just before we get to the stop loss, Euro US dollar is recovering and you're planning to add to your shorts. You're going to add to your shorts most likely in about this 109.40 level when it gets up to structure and then goes down again, or up here, maybe 109.23, 25. And then you can add to your shorts over there, somewhere down there if you want to. Hopefully you've brought your stop loss in already into cost or whatever the case. So let's talk about the stop loss for Orlando before we go. I'm going to have to go just now. So what I was explaining to everyone is, you know how to get the stop loss, obviously, Orlando. You put your stop loss in place, right? So like I've explained to everyone, that if you have a $100,000 account, you want to make sure your stop loss is the same. You want to make sure your stop loss is the same on every single trade. So don't change your stop loss for every trade. So it's $1,000 on every single trade. But now how do we move the stop loss so we don't get stopped out for a pittance every time we're trading? What we do, we've got this distance here, right? So let's go to one that's in profit at the moment. Now, we've got $1,000 profit at the moment on this trade. We had $1,000 stop loss. Stop loss when it got to about 600, which is 60% up on the stop loss, and it was looking really strong. What I did is I looked at, we're on a trend resistance. We're on a trend resistance, right? And we got into the trade around here. So when the trade got to around this level, which was the 193, which was about $500 or $600 in profit, we moved the stop loss up to, and it was actually first we moved it up to cost, then we moved it up into profit on this trend resistance line, because the way I see it, if it comes back and it breaks the trend support line, not resistance, support line, then the trade becomes invalid. So that's the way I'm looking at the trade. So I'm not taking my stop loss and just moving it up behind the price. I'm taking it up and moving it on the trend here, okay? So at that point, I kept the stop loss on this trend. I kept it down here so that if it came back and took it out, it would have to hit the trend support before it took out my stop loss. But then I got to a point where I'm $1,000 in profit. And I look at that as a decent, reasonable one-to-one profit. And I wouldn't be unhappy with that kind of profit. So then I've moved it to a closer area, which is this high over here. And I've said, I'm quite happy if I get $850 profit. I've moved it right up close. And if it comes back now and takes that out, then I'm happy with that. But up until that point, I was keeping my stop loss further back, sort of beyond the trend support area, so that if it came back and hit the trend support area in that area, it wouldn't take out the stop loss. It would take out the trend support before it took out the stop loss. So I kept my stop loss below the trend support, for example. The other way you can do it is keep it a certain distance behind the trade. So for example, let's say you've got $1,000 stop loss. It goes $500 into profit. You're happy with that. You take it up to cost. And then you just keep it $500 behind the price all the way up, okay? And if it comes back and takes that out at any point, you're happy with that. That's another way to do it. But keep it far enough behind it that it won't take it out quickly. In this case, I'm actually not unhappy if it takes it out quickly. In this case, I'm quite chuffed if it takes it out quickly, there's no problem. I'll be happy with that profit, because from here, it either continues on going up or it comes back and comes back to that trend support, in which case I'd buy it again. So for me, it might come back and take that out. I'm not too worried, but just keep it far enough behind. So I would say you've got $1,000 stop loss, keep it $500 behind it at all times when you're on your way up in this area here. But in this case, I'm moving it up quite high. So this might be a scenario where this might get taken out, but it's not a pittance. Does that help, Orlando? Just let me know before I have to go. How's it, bud? Welcome, welcome, trade of the day. There we go. Fantastic. Aussie 1. Okay, take it you trade the Aussie dollar quite a lot. You're the Aussie dollar guy. And yes, you did move your stop loss. That's great. Scalper line. Hi, welcome. Okay, so we've been on for quite a long time. Orlando, just let me know if that all worked out for you, if that made sense to you before I hit the road and move. We've been on the show for quite a bit, and I'm hoping that gives you an understanding of moving your stop loss. Try and move your stop loss. Try and move your stop loss into areas that are still valid, so that the only time the stop loss gets taken out is when you feel the trade is now valid. In fact, even here, even though this is close, I think if this price comes back below that high, it's kind of going the other way. It's kind of going the other way. Okay. Right. Multiple. Yeah. Okay. So let's see how we look. Anything here? Yeah, Orlando. So I'm hoping that has covered your question. It is actually kind of time for me to be moving on soon. So okay, anybody else got any questions before I go, before I head on, before I move and go and do my thing for the day? Anybody else? You all good? Hopefully you're all good there. If you've got any trades, let me know, guys. You've got the Discord channel, you've got the information, and multiple Aussie trades. That's it. We've got people from Scotland, we've got people from Mozambique, we've got people from Australia, New Zealand, England. It's the most amazing thing, these live videos. You get everyone from all over the world, and that's exactly what we enjoy. David, it's an absolute pleasure. I hope you guys got something out of the content. I hope the content has helped you guys in some way or another. And we'll do it again on Thursday, and we'll talk further and see how we're going. And from India, my goodness, we're all over the world, guys. And there's Germany, Switzerland. Excellent, absolutely excellent. It's amazing how we can actually, get together from all over the world, and we're all traders, and we're all trading the markets at the end of the day. It's fantastic. Okay, no, it's absolute pleasure. I hope you guys had a really good one. Carl, pleasure. I hope you answered your questions. Sweden as well. That's absolutely fantastic. I love to see that. Amazing. Another Sweden. Sure. Can't believe how diverse we are here. This is fantastic. And the subscribers are growing. We're becoming a really big community. We're growing, and hopefully we can get everybody into a profitable groove. Everybody making some money and everybody doing well. Of course, David, South Africa. Yeah. Japan. Wow, that's amazing. Japan as well. Yeah, I'm just looking at where everybody is from here. This is great. UK. Four Ways. I know Four Ways well. I know Four Ways very well. I live in Cape Town. Lived here for a long time, but I did live up there. Lived in Midrand for a while. So Four Ways, yeah. Fantastic. It's a lucky spot, actually. Good spot. Very good spot. Four ways is for the wealthy, by the way, guys. Austria. Oh man, that's amazing. Henry in Austria. That's great. Fantastic. It's funny. My wife's from Czech. That's I believe somebody's from Czech is here as well. Elaine, yeah. Thanks. Pleasure. Absolute pleasure. So guys, I'm gonna hit the road. Gonna be on my way. I hope the stop loss explanation today was clear and concise, and I hope you guys all got it and you all understand it well, because I keep getting the questions on it, and it's important that everybody understands how it works. And there's the Australia. Also in Australia. Fantastic. I love Australia. Fantastic place. I love the people. Anyway, so time for me to hit the road. Time for me to be on the way. Thanks for watching, guys, and I really hope you enjoyed it. And don't forget to come back, watch tomorrow's video, and then again on Thursday we'll be live again, and we can chat about the markets. Because, like I said to you, this live show is not for me about taking little trades and 5-minute trades and proving to you how much money you can make and can't make and that sort of thing. It's about us chatting about the markets, finding out how we can trade the markets in the most relaxed and positive way possible, and actually make some money, actually make some profit at the end of the day. And there's someone from Central USA here. What's the time zone like there? Goodness me. I don't expect too many people from America to be here today. You guys should be here on Thursday, and it's quite early, so you up early. At least I would think so. But guys, thanks a lot. Till next time, I'm going to be on my way. I want to say thank you. Cheers. Ciao.